Good evening. My name is Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, January 19th, 2020. The strongest house of cards in the world, that's the title of this week's video. Not to imply at all that some sort of crash is coming next week or even the week after, but I do need to point out various structural deficiencies in the ES market that are really important to know going forward. Gold, still strong after the recent rally, consolidating at recent highs, and we just had a very nice reversal bar on the weekly charts. I'm going to show you why I still think that the yellow metal is providing good entry even at these elevated levels. Earnings season. We just kicked off recently, but in my mind, it's not going to really start until next week, and that is because Netflix is going to hit us on Tuesday. I think the meat of the earnings season always begins with the FAANG stocks, so we'll talk a little bit about those. And last but not least, as usual, I leave you with 3 trade ideas. Without further ado, let's get into it. So starting with this weekly S&P, I just want to make one thing very clear before we get too deep into the video, and that is that the title refers much more to the structural underpinnings in the ES futures, which I will show you in extreme detail when I get to the market profile section, and not so much to the technicals, because we just have a very simple uptrend that is, obviously just making higher highs each week. This is a weekly chart. The only thing that is really glaring from a technical perspective, and I said this last week, is the fact that we are outside of this top of the channel here in the SPX. And whenever you move to the outside of the channel, that tends to be a sign that things are getting relatively overheated. If we switch over to the NDX, NASDAQ 100, this is really glaring. I saw a blurb today that said tech stocks are in a bubble. They may be, but again, what defines a bubble? You have to be very specific when you talk about these things, because it's very easy, I think, for a lot of people to just fall into the trap of thinking that a market is overbought just because it's at a certain level or it's been up a certain number of days, etc. But those things aren't very scientific, and that's why I hope that you at least take away from these videos that I do go much deeper than that, and I talk about structural things, and I talk about things like distance from the 20-period moving average and such. So that being said, the SPX is clearly exhibiting a huge shift away from the 20. As you can see, 3100 here up to 3330 approximately. The close on the SPX on Friday was 3329, so let's call it 3330 at the close, right? So literally, I mean, this is just a huge shift now of plus 220, right? From 3100 to 230, excuse me, because we're closing at 3330, yeah, plus 230. That is a huge extension from the 20-period moving average. So these are the things that you have to be looking at, structural things like this, things that can actually be quantified. And if you see or hear people on the internet or on the news not talking about stocks with these specifics in mind, bringing this context into it, then really you should just not listen to it, because it's just a bunch of nonsense, because prices can keep going higher and higher all they want. And unless you have specifics you can point to structurally and things like this, then it doesn't mean much. So definitely there is some overheating in the market and is getting itself a little bit overextended, but again, it's really about the structure. Russell, I continue to watch for this move to the all-time high. I think that could happen. This is going to be a pretty firm resistance point in the Russell, I do believe, at the 1740. This probably will be shortable. I don't see the Russell on a weekly basis making this many weeks up and then continuing without some sort of a turn back. That's why I had this Fibonacci on the chart, which I just took off, because I was actually looking at what would be the target on a retracement. So I think with the market continuing forward, rut is probably a long into the high, and then look for some sort of a Fibonacci or percentage pullback to some target lower. All right, so that is what's going on in the broad market. Now I'm going to move into the market profile section. Here's where I get into the meat of the video to really discuss why I think this is looking more and more like a house of cards, for lack of a better term. The virgin points of control and gaps unfilled below us are absolutely unprecedented. Let's start with the bigger picture in terms of the longer move, which started, I believe, in October, and that's where I started measuring all these VPOCs and gaps from. That number, as of Friday evening, is now up to 14 in terms of virgin points of control. Remember, a virgin point of control is a either widest point of the profile where the most time was spent or where the most volume was spent that has not been tested or traded back through in subsequent sessions. That means that it is an untouched point of control, and we call that a virgin point of control, or VPOC. Usually, when the VPOCs stack more than 5, it is very, very noteworthy. In a more normalized market, you will get a liquidation break and correct that activity if you get like 5 or 6 of those. This is at 14. Again, unprecedented. I've never seen it. All right. Next thing is also gaps. We now have 8 unfilled gaps beneath us. If you count this small one here that happened between Thursday and Friday of this week, you can see Friday's activity gapped up, opened here. And again, it was a partial gap fill only. I am not surprised because obviously many gaps that are double digits like that, they tend to be only partial gap fills. I will send you at this point, if you don't understand this concept, because it is very, very important, and if you understood this concept, you would have been fine on Thursday and Friday, and that concept is the gap rules. So if you can, at this moment, pause this video, go to ShadowTrader.net, and scroll all the way down on the homepage to the footer at the bottom of the homepage, and click on the glossary. And when you get to the glossary, click on gap rules and avail yourself of the gap rules. And I guarantee you that if you wake up to a gap any morning after you read the gap rules, especially a large gap, you will never ever think of the markets the same way again. If you can get those 4 rules really, cemented in your mind and make them your own. Like I said, I guarantee you'll never look at a gap the same way again. The most important gap rules on large gaps are gap rule number 2 and gap rule number 4. Gap rule number 2 states that large gaps often do not fill on the first day. That obviously happened here on Thursday and Friday, meaning that it didn't, or they may fill partially and not fill fully. That happened. Gap rule number 4 states that when the gap is larger than 10 points, it is often very difficult to fill and shorts get frustrated. This is because the MO of the market is generally to digest the overnight move, especially in the context of a bullish tape that we have now. Many traders make the mistake of always thinking the gaps are fadeable, and when they see a big gap up 15, 17, 20, whatever, they want to fade that. But 99% of the time, those are the gaps that end up being gap and holds, and they go nowhere. It's just kind of a sideways choppy action, and it becomes very, very difficult to trade. Okay, so we've talked a little bit about the structure in the bigger picture, but I want to just show you just the structure of the last couple of days. And this has been going on for a while, but specifically Thursday and Friday is very, very interesting. And I want to illustrate all of this just to really drive the point home how much of a house of cards this is becoming, and how a liquidation break is definitely at some point imminent. We shall see. But anyway, one of the things that I look at very closely in my Peter's pre-market perspective every morning is whether or not the overnight inventory is net long or net short. And this is a perfect example between Wednesday and Thursday of overnight inventory that is 100% net long. What do I mean by that? I mean simply that 100% of the overnight activity is above the settlement. Now, obviously, there is this tiny bit here, which I'm just ignoring. So let's just call it 99% or whatever. But when it's that close, we call it 100%. We know that the activity has to be net long. Why? Because prices rose in the overnight session, correct? And they opened somewhere up here. So with prices rising in the overnight session so much, and all of the activity, meaning that no time whatsoever was spent below the prior day settlement, no volume was traded below the prior day settlement, obviously the inventory is net long. What happens the next morning is that inventory should correct. Big air quotes on should, right? That's what creates the fade, basically, is that overnight inventory getting ahead of itself, and then it corrects a little bit and comes back down to the prior day's high, potentially, and fills the gap. When it doesn't do that, what it does is it validates the activity of the overnight players, and it basically deems them to be right, meaning that no corrective activity was necessary. The price exploration that the overnight players got involved in ended up creating value in the RTH session up at those higher price levels. Okay? So on Wednesday, Thursday, we have 100% net long overnight inventory, and the market does what? Opens here and closes all the way here. Gap and hold, and makes a spike to the upside. Between Thursday and Friday, the overnight inventory is again 100% net long, correct? And again, the market closes here. It closes in the middle of the range, but it makes a higher high here. Okay, the point I'm trying to make is that when these things continually stack up like this, on top of all the crazy poor structure down here as well, this is when liquidation breaks occur. This is the potential for liquidation breaks. These are the nuances and structural deficiencies that the average person does not pay attention to because they are only fixated on price. That's all that they see. Okay? Now, all this being said, it is very hard to just blatantly make the call that the market will be down Monday or Tuesday, or excuse me, close on Monday, but let's say Tuesday when it comes back off the break. It doesn't necessarily work that way. But if you get structure like this, and let's say you get a close, for instance, very close to a high, where you know that you have a tight stop going into Sunday night, or in this case, Monday night, right? We've got a day off. Then you can initiate a short against that, all right? So this is all just very, very important information to carry forward. Each one of these structural deficiencies is just one data point. One data point doesn't really make for good decision making, but when those data points stack, one on top of another, over and over and over, then they become much more powerful. They become exponentially powerful. And that's what I believe is happening here. I don't know when this liquidation break will occur, but when it does, this house of cards is setting it up for a very large liquidation break because the structure that is underlying it is very, very weak. It shows you that there is a lot of momentum trading by short-term traders who are chasing up in here, and the larger players who like to wait, who like to buy on the bid, who like to let those liquidation breaks occur, let those gap fades come in, leave their orders in on the bid. Okay, they are not active. That's the other time frame, the longer time frame. It appears to me that it is the shorter time frame that is active here, that is continually chasing prices and bullying them much, much higher. Okay, let's switch gears a little bit and move into gold. I wanted to say that gold continues to offer new entry points in this long run. Most notably now, currently on this week, we have this nice reversal bar, which is a hammer. I've often said that I don't give a lot of credence to these hammer formations on any time frame lower than weekly. All right, just keep that in mind. I'm not really interested in them at all, but I do find that in any lower time frames, but I do find that in the higher time frames, starting from weekly and then obviously monthly is the next one up, these tails do have a lot of predictive power where prices have a hard time getting below the tail. So I think it's very, very bullish, and new longs can be initiated again on gold, targeting this prior all-time high area and then much higher. Okay. Earnings season, it is upon us. We have already started to get the banks and some other, just a few key names trickling in. And I just wanted to mention that next week when we come back after break, we'll kick off the FAANG stocks. First one is going to be Netflix, which is going to be reporting on Tuesday after the bell. IBM also reports that day as well. But Netflix is the first of the FAANG stocks, which is going to report. I won't give you any real opinion on where I think these are going. Some are obviously more bullish than others. The main reason that I'm mentioning it is I tend to think that when the FAANG stocks start to report, that is really the meat of the earnings season kicking off. So just be aware of that. That's really what matters, especially in a situation like this market where, as I showed you earlier in the video, the NDX is really a little bit overheated. Looking even more overextended outside of the channel than the NDX. All right, so remember, Netflix is going to report on January 21st in the PM. All right, last but not least, I am going to leave you with some trade ideas. I've got three this week. Tesla has been absolutely on fire lately and has been experiencing a pullback over the last couple of sessions. I'm just going to remove all these. You can see here I've purposely put a trend line, and I kind of put it on the hourly here. I'm going to actually redraw it just to make sure it's perfect. So if I swing it out, first touch comes to here. We've just now started to break out to the upside, but it hasn't been very powerful. So I'm not yet sure about the reentry. I think in the bigger picture, what the stock wants to do is to consolidate this gain a little bit longer before rising, obviously commensurate with the market holding up. Last one is Beyond. Beyond had this enormous move breakout from this long consolidation. Notice the volume here, increasing up to a crescendo. That's good. So volume's building on the days up, and notice volume is falling on the days down. So that's good. Obviously, your key support is here at these lows, which is in the 105.5 to 106 area. So we'll see if those hold. I'm going to be watching that very closely next week to see if those hold, and obviously expecting a little bit more sideways action and then a swing back to the upside. All right, last but not least, NVCR, which is a stock that I have talked about for quite some time now. I brought this one to you a long time ago, I believe at about half the value that it is now. And I just wanted to point out this weekly chart that I think is amazing. Notice that there has been this sort of W pattern consolidation, and it is at the same level here, right at the line. And I believe that the 100 level is imminent. And to be honest with you, this actually could be much, much higher in 2020 and beyond. This is more of an investment idea. Look it up. It's a pretty interesting company. More than just a trade. I think this could be one to hold for a couple of years and maybe go for a 2x or 3x. All right, we shall see.
And that's all for this week's video. Thank you as always for spending just a little bit of your weekend with me. So to recap, market extremely strong. There's no denying that. But I did want to point out in this video all the structural deficiencies that are below us, and they continue to stack up. The main takeaway here is always to remember that when those deficiencies stack up, they become exponential in nature. So just remember that. Carry all of those data points forward. Personally, I don't think the market has any real give back until we hit Dow 30,000. We're only about 650 points away. And beyond that, the earnings season is upon us. We've already started. FAANG kicks off next week, as I was saying. And if those numbers are strong, expect the NASDAQ to power higher, and we won't have any pullback until that earnings season is over. All right. Beyond that, next week is a shortened week. Take it easy on Monday. It is Martin Luther King Day. I'll be reading letters from a Birmingham jail, as I usually do on that day, and then we get back into action on Tuesday. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.